Welcome to Wealthfinity. In this channel, we will explore the topic of net worth and what it takes to be considered rich. We'll dive into the numbers and statistics, as well as provide practical tips and strategies for building and maintaining wealth. Whether you're just starting out on your financial journey or are a seasoned pro, there's something for everyone here at Wealthfinity. So join us as we explore the world of net worth and discover the path to Wealthfinity. The term rich is a subjective one and can mean different things to different people. However, when it comes to determining a minimum net worth to be considered rich, there are a few commonly cited benchmarks. One widely accepted definition of rich is having a net worth of at least $1 million. This is often considered the threshold for achieving financial independence and being able to retire comfortably. However, this amount may not be enough to sustain a lavish lifestyle in certain high-cost areas or for certain individuals with very high expenses. Another benchmark for being rich is having a net worth that is at least 10 times your annual income. So, for example, if you make $100,000 per year, you would need a net worth of at least $1 million to be considered rich by this measure. This definition takes into account not just savings and investments, but also the value of any real estate or other assets that you own. It's important to note that net worth is just one measure of wealth, and there are many other factors that contribute to financial well-being such as income, expenses, and cash flow. Additionally, being rich is not just about how much money you have, but also about how you use it and how it makes you feel. When it comes to defining rich, opinions tend to vary. For some, it might mean having a certain level of income or possessions. For others, it might be more about living a certain lifestyle or having certain experiences. However, when it comes to understanding net worth, a more concrete definition can be applied. Net worth is the total value of a person's assets, property, savings, investments, etc., minus their liabilities, debts, mortgages, loans, etc. In other words, it's the amount of money a person would have left over if they sold all of their assets and paid off all of their debts. For example, if someone has a house worth $500,000, savings of $200,000, and investments worth $300,000, but also has a mortgage of $300,000 and credit card debt of $50,000, their net worth would be $650,000, $1 million to $350,000. It's important to note that net worth is not the same as income. A person may have a high income but also have high expenses and debt, resulting in a low net worth. Conversely, a person may have a low income but live frugally, save and invest wisely, resulting in a high net worth. It's also important to note that having a high net worth does not necessarily equal happiness or fulfillment. Money can certainly make life more comfortable, but it's not the only thing that matters. And it's important to have balance and perspective when it comes to your wealth. Net worth is a measure of your financial health and can be a useful tool for determining your wealth. It is the difference between your assets and liabilities, and can be calculated by adding up the value of all your assets and subtracting all your liabilities. In this video, we will show you how to calculate your net worth and what it can tell you about your financial situation. Step 1. Gather your financial information. To calculate your net worth, you will need to know the value of all your assets and liabilities. Your assets include things like cash, investments, property, and any other valuable possessions you own. Your liabilities include things like credit card debt, mortgages, car loans, and any other debts you have. Step 2. Calculate the value of your assets. Start by making a list of all your assets and their current value. This includes things like cash and savings accounts, investment accounts, e.g. stocks, bonds, mutual funds, real estate, e.g. primary residence, rental properties, vehicles, jewelry, art, and other valuable possessions. Step 3. Calculate the value of your liabilities. Next, make a list of all your liabilities and their current outstanding balance. This includes things like credit card debt, mortgages, car loans, student loans, medical bills. Step 4. Calculate your net worth. Once you have the value of your assets and liabilities, you can calculate your net worth by subtracting your liabilities from your assets. Net worth equals assets, liabilities. Step 5. Assess your net worth. Your net worth can be a useful tool for determining your financial health and wealth. A positive net worth means that your assets are worth more than your liabilities, and you have a positive net worth. A negative net worth means that your liabilities are worth more than your assets, and you have a negative net worth. It's important to note that your net worth does not reflect your income or the amount of money you make, it's just a snapshot of your current financial situation. Calculating your net worth is a simple process that can provide valuable insights into your financial health and wealth. By regularly calculating your net worth, you can track your progress and make informed decisions about your finances. The minimum net worth to be called rich can vary depending on the person's perspective, living area, and lifestyle. However, a commonly accepted benchmark is having a net worth of at least $1 million or 10 times your annual income. It is important to remember that net worth is just one measure of wealth, and overall financial well-being encompasses many other factors. In conclusion, determining how much net worth is considered rich can be a subjective and complex process. Factors such as location, lifestyle, and personal values can all play a role in determining what constitutes wealth for an individual. However, by understanding the concept of net worth and learning how to calculate and track it, you can gain a better understanding of your own financial situation and work towards achieving your own definition of wealth. Additionally, it's important to remember that being rich is not just about having a high net worth but also having a good balance in life, having a good relationship with family and friends, and overall being content and happy.